please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Opening was the low for Bank Nifty today. The open equals low. Sometimes if that is respected in the first hour, you normally have a decent short covering bounce. So that could happen. And HDFC Bank and ICICI Bank, while still in the red, are trying to recover from the morning gap down. Nilesh, a word on fund flow situation right now. Massive FIs selling. Of course, normally I see you happy when FIs are actually selling and we are taking some of the equity back from them. But do you think the domestic fund flows will continue and will compensate this large FI selling that we are seeing?
So Anuj, if they sell maybe up to $10–12 billion a year, we can easily absorb that. But if they sell $10–12 billion in a month, then we certainly don't have ability. We cannot really absorb that kind of flow. And domestic institutional investor flows have remained reasonably robust. Of course, they have slowed down in Feb compared to Jan based on the market volatility, or maybe imposition of long-term capital gain tax, or maybe both. But it is still positive, reasonably robust, and moderate amount of selling by FIs we should be able to absorb. And in a way it is good because that gives us opportunity to buy these stocks at reasonable prices rather than way higher prices. But if they do a lock, stock and barrel sell, then certainly we don't have ability.
Okay, but how has the investor behavior been so far? And just an added point about the fund flows into mutual funds. Last year, there was a lot of demonetization related money that also came. So what is the realistic average flow this year?
So my guess is that the demonetization related flows, while they did occur in, November, December, post-November, December 2016 into first quarter of 2017 calendar year, the velocity of money effect should, continue to give us more amount of flows. More importantly, last year in 2017 when we begin, probably our SIP flows was 1.5 crore. Today that has crossed 2 crore. So there is a reasonable amount of stable money coming in. EPFO money is also flowing in. So my guess is that this year also, unless until some extreme volatility occurs, calendar year 2018 flows in mutual fund should be almost similar to calendar year 2017. There wouldn't be significant divergence.
Okay.
Okay, Nilesh, my final question to you is a simple one. Is there anything that you would strictly avoid and advise sort of staying away from in this market as we go through this year of volatility, which 2018 will be, as you say?
So instead of saying what you should avoid, I will say what you should do. Please follow asset allocation sincerely. This will be markets which will keep on going up and down, and it's your asset allocation which will help you to manage volatility. That will be the most important thing.
But at 8, will some of the money that you get for equities go to bonds?
Lata, ideally at 780 10-year yield, when your inflation is averaging about 4–4.5%, I mean, you don't get this kind of real return even in equities worldwide. So it's a fantastic rate of return. But as I mentioned earlier, when the largest participant of markets, are sitting outside, then it becomes technically difficult to take a call on the bond. Historically, we have always said do SIP in equity, do STP in equity fund. Now we have started saying that look, do SIP or STP in fixed income fund as well, because in the near term yields can go up and down. We have no idea where they will go. But fundamentally 4–5% real rate of return on fixed income, you won't get this in any other part of the world, even in equity market.
Okay. Well, that's advice for both equity and debt investors. Thank you very much, Nilesh Shah, for joining in and giving us your perspective. Always valuable. The mid-caps continue to dither. but the Nifty Bank has not revisited that 24,802 low. It's continuing to show a little bit of bounce back from those levels. But Nifty is still in pain. It is still 0.5% lower. The lone performer has been, of course, the IT stocks. In fact, they're all in the green. HCL, Tech Mahindra, TCS, Infosys, Wipro. Of the 7 or 8 stocks that are in the green, 5 of them are IT stocks. So that brings us to the next topic under discussion.
Absolutely, and it's the one that the market has been really fixated on for several weeks right now. Well, if there's one sector that's been shining right, it is the IT space. So are things going to get even better from here on? We have with us Mr. C.P. Gurnani, MD and CEO Tech Mahindra, Farid Kazani, MD Majesco, as well as Apurva Prasad, Research Analyst IT at HDFC Securities. Thank you, gentlemen. Good morning to all of you, and thanks very much for joining us on this very important conversation. Mr. Gurnani, sir, first question to you. Obviously, investors, your shareholders, very excited. I mean, Q3 was a great quarter for the company. Is it looking even better? What is changing as we head to Q4 and then the new year?
I just came back from the NASSCOM conference and couldn't help but listen to the comments that Nilesh made. Frankly, you know, you've seen the projections that came in from NASSCOM, 7 to 9%. The commentary said FY19 would be a shade better than FY18. My belief is that all the top 20 companies are embracing digital, have their own strategy. Some people are going in for platforms, some are going for products, some are just going in for investments in new technologies. But overall, I feel a lot more confident about the IT sector. In terms of Tech Mahindra, you know my portfolio is 50% communication, media and entertainment. We are seeing a revival there, mainly because of 5G and the IoT catching up. And I do believe that we are on the right trajectory.
Okay. Mr. Gurnani, good morning. The criticism of Indian IT over the last 5 years was that they could not evolve beyond body shopping. Is the basic business now changing, basic business model? Are the Indian IT companies now able to adapt? And can we go back to the golden period of companies reporting, double-digit revenue growth at some point?
I think this criticism or comment is totally outdated. The body shopping wouldn't have worked if it for so long. The reality is that you could call a McKinsey a body shopping company, because ultimately to deliver a project they have to put knowledge workers out there. So similarly, I think in IT consulting or IT projects, I mean, our raw material is the tech talent, and so I genuinely believe that Indian IT, Tech Mahindra, has moved up the value chain. Now we deliver operations, we run operations for our companies. We are involved in their consulting. Many times we are involved in their boardroom presentations. So I think the industry has moved on, and at least I am very confident that what we are calling as body shopping is just a way of contracting, but the responsibilities that Tech Mahindra is delivering, or the Indian IT is delivering, is far, far high.
Okay. Well, that's good to hear. Let me check if Farid Kazani Farid Kazani is echoing your views. Farid, a similar question to you. Are you seeing Indian companies graduate to digital? Are you seeing better demand from global buyers and better billing opportunity?
Yeah, I would clearly agree with Mr. Gurnani. I think there is a wave of digital play across various sectors. And in particular, when you look at the insurance business that we are present in, we are seeing a lot of companies looking at a digital form of improving their business and giving better customer experiences.
So, Mr. Gurnani, to go back to that point, now as we're looking at budgets perhaps getting even better, FY19, What is going to be the differentiating factor in getting that wallet share? Earlier, I mean, it could have been pricing, cost. What is it going to be now? And then therefore the growth rates that we can expect from a company like yours?
So, as I said right in the beginning, that every company will have its own strategy. There would not be a uniform code of conduct as we go along, because digital by itself means amplification or disruption. For Tech Mahindra, we are following a strategy of run, change and grow. Now, run to me is continuing to support the systems and to keep the bulb lights on. Change is where we are moving the infrastructure to cloud, or grow is when we co-invest with our clients to create new lines of business. As a strategy, it is working a lot better. We are able to engage at a CXO level. Okay. And clearly it is not only about the IT budgets, it's a technology budget, which anyway are increasing, because every organization, every sector, we analyze 17 sectors across the globe in which we play a role, and all 17 sectors, the technology spend is going up.
Okay. Okay, that point is taken. Let's do one thing. Let's get an analyst view as well. Apurva Prasad is also with us from HDFC Securities. Apurva, good morning. We have seen a large rally in IT stocks. Do you think this was a case of just valuations catching up with the overall market, or are you sensing some big changes right now?
So I think it's a bit of both. So there's certainly a lot of valuation catching up considering the prior period underperformance that you're seeing, and a lot of underweight positions prior to that. So I think a lot of it is some sort of mean reversion. Having said that, I think there is a very clear case to state that the trajectory is expected to improve. After continued years of decline for the industry, it's quite easy to fathom now that probably bottom is sort of made for the sector. So I'm not really suggesting that we are getting into a very strong acceleration in terms of growth rates, but you can certainly build a case that a bottom has been made.
Okay. Well, IT ultimately will also be a play on the GDP growth of the developed markets who are giving them orders. To that extent, Mr. Khazani, are you seeing, because we're getting strong GDP numbers from developed markets, is that reflecting in terms of higher volume of business? I mean, for instance, if you can tell us if your deal pipeline looks better.
So, Lata, in the last quarter, we've had one of the best record closures in terms of deals. We closed 10 deals in the last quarter, which was a record for Majesco. We ended up with the highest order backlog at $92 million, which gives us tremendous visibility for the next 12 months. And if you look at the shape of deals, it has come from all the regions. We've seen the US giving 6 out of 10 deals, the UK region gave 2 deals, and the APAC region also another 2 deals. So there has been all-round improvement in the regions that we operate, and I think I can attribute that to a lot of changes that we have done in the company. One is in terms of developing the right products and platform for the insurance sector, which actually is catching up from a technology transformation. The second is we've got a pretty good running partnership with IBM, which is a unique platform that we are creating as a go-to-market strategy for some of the large tier 1 customers and tier 2 customers. And that's a partnership that we are planning to kind of roll out across the globe. And the third thing is that we have also kind of added a very strong digital-first platform, which again gives certain customers a unique way in terms of having a great customer experience and giving a lot of benefits. Where they can have a microservice hub applications integrated immediately.
No, actually, I'm wanting to know only if growth as a parameter has given you all more orders. Mr. Gurnani, if you were a guy, that was the point. If you were a guidance-giving company 3 months ago and now, would you expect the guidance to be, better?
I think it is, I will only repeat the point that the trajectory seems to be in the right direction. At the same time, expecting that every quarter you would get a similar growth or a accelerated growth. I think we will have to wait and watch, because clearly the impact of tax cut, what happens in the boardrooms of the various American corporations. We are a lag industry, and we will have to watch for 3 quarters before we come to any judgment.
Okay.
But sir, double digit, to go back to Anuj's fundamental question, FY19, double digit top line growth possible?
I'll stay with the NASSCOM guidance, 7 to 9%.
Okay. Well, Apurva, therefore, is the buying in IT companies more because you want multiples to catch up with the other sectors, or do you think there could be earnings upgrades going by the generally positive growth trends in developed markets?
No, Lata, so I mean, as I said, I think there is some amount of valuation catch-up too, but there has also been some amount of earnings upgrade, particularly in the mid-cap IT space. So I think there's been reasonable earnings upgrade coming in that, and they're probably in a sweet spot there. But I think some of the things are working very favorably even for some of the larger companies. So whether it is, continuity of some of the mission-critical projects, the size of digital projects which are getting, extremely, a lot bigger now, which was earlier just volume-driven, now a lot more value-driven. So I think some of these things are really playing out well, and that's working in the favor of some of the large cap IT companies too.
All right, Mr. Gurnani, Kazani and Apurva, thank you very much for joining us with your thoughts today. So the positive view that the stock markets are expressing somewhat endorsed by the IT veterans as well as by the expert, the analyst. But we're going to stay with the IT space for a bit more, because we have a CNBC-TV18 exclusive news break, even as Infosys's former CFO Rajiv Bansal continues the fight for his severance package of close to 12 crore rupees in arbitration. Sources tell us that Infosys has in fact sought a large sum in counterclaims from Bansal. Rukmini Rao, our correspondent who broke that story, is joining us with the details. Rukmini, tell us what you're picking up.
Well, Lata, this is almost a 1 year old case where Rajiv Bansal is fighting in arbitration to get close to 12 crores that is due from Infosys. Infosys has already paid out about 5 crores as a part of his severance. But what we have learned from our sources is that, in fact, Infosys in a counterclaim has claimed over 100 crores. In fact, what we have been given to understand is that the sum is around 135 crores as, kind of a counterclaim for certain acts of his that have amounted to breach of trust and also breach of confidentiality. But however, we'll have to see how this entire arbitration process goes ahead and what kind of an award finally comes through. But for now, Infosys is not, going down without a fight as far as this arbitration goes. Back to you.
All right, Rukmini. Thank you very much for picking up that very interesting news that Infosys will not be paying up counterclaims, but in fact will be demanding something from Rajiv Bansal in counterclaims. So you're going to take a break on that note. But coming up, could Indian exchanges be looking at extending an olive branch to foreign exchanges like SGX? There was a press release yesterday from the BSE and NSE which seemed to indicate that. We will discuss the details with Vikram Limai, Managing Director and CEO, NSE, in a minute after this break.
Open Exchange, presented by National Stock Exchange, in association with Fine Cure Pharmaceuticals, making lives healthier.
Escorts, engineering the fundamentals of growth. India, we are ready.
प्रफुल्ल को बिरयानी इतनी पसंद आई कि पैक करवा के ले गया। तुम्हें पार्टी ऑर्डर्स लेने चाहिए। तुम बेकरी खोलना, नहीं, रेस्टोरेंट, और त्रिशाज नाम रखना तुम।
तुम तो ऐसे बोल रहे हो जैसे तुम ऋषि।
मैं रहूं या नहीं, त्रिशाज तो खुलना चाहिए।
मैनेजर बनोगे?
प्लान्स बनाते रहो, जिंदगी सजाते रहो। LIC के एंडाउमेंट प्लान्स, सेविंग्स और सिक्योरिटी दोनों के बेनिफिट्स के साथ। LIC, जिंदगी के साथ भी, जिंदगी के बाद भी।
This is TV18 and you're watching CNBC-TV18.
Corporate Radar brought to you by New 2018 Verna and Toshiba, leading innovation.
Welcome back. Well, the Bank Nifty has not revisited that 24,802 mark, but it's not made too much headway either. 24,850 also is proving to be.
Yeah, but the top 5 gainers are all IT names, and obviously that pair trade is well and truly on for now. In fact, if you look at HCL Tech, that's now at the high point. Tech Mahindra, Infosys, TCS, there's Sun Pharma as well, of course. So if you see the left and right hand side of that contribution plate, you can see that differential. Ashwini and Mitesh back with us. Rajat Bose is also with us. Ashwini, so for now, lows are holding. Do you see this as that kind of a day with the low holds? And what would be the stock calls now?
See, there's a very high chance that a short-term bottom has been made. And while IT did well yesterday, it's done well today, the index that I expect to move up more strongly is the banks. Because what did everybody expect? They'll go down. The news was negative, bond yield, this, that. But Bank Nifty goes up. So that means that news has been used to cover shorts. And given that now we've tested this 4 times, I think in 4 odd days, this zone of 25, 800 thereabouts, 24,800. I think this is now holding on. And finally, the place of least resistance could be on the upside. So I'm expecting that Bank Nifty will at least get into the positive. And overall, Nifty should be closer to 10,400 by the end of all of this, rather than towards 10,300. Having said that, I think Kotak Mahindra Bank is doing very well. Yeah. That's a buy with a stop of 1,045, target of 1,080. Hexaware is a buy with a stop of 345, target of 370. And Mindtree is a buy with a stop of 738, target of 760.
So you're long on the Bank Nifty as well, Ashwini, on apart from the IT stocks?
Yes, I did not plan to trade it, but because it opened exactly at the lows of last 3 days, that meant that shorts will get into trouble in case this level is not breached. So that way, I think you could see short covering throughout the day, particularly given that today you have a expiry both on Bank Nifty and the Nifty.
Okay, that's interesting. How the mood swings. Mitesh, would you concur, and would you now start looking at short covering candidates and buy calls?
So I think, I've been debating that as much. We had some long position in the Bank Nifty yesterday. We've maintained that. I haven't added to it. I think very clearly, it's kind of held on to that zone 24,800, 820, which I think everybody is watching now. But the rebound still is not very conclusive. But clearly the strength and outperformance coming from IT. So it's more safer, possibly more better, I think from a trading perspective to put more capital there. So IT remains the top long choice. That apart, I think the calls which I have right now, I have a sell on Asian Paints with a stop at 1127 for targets of 1,060, and Mindtree I think I mentioned in the morning as well, again an IT stock. That's a buy now with a stop at 727 for targets of around 785.
I'll tell you what, even the mid-cap market is showing signs of life now. Plenty of stocks bouncing around. Biocon, Shriram Transport Finance. Small gains coming in on many of them, 2 to 3%, depending on which stock you're looking at. EIL. Obviously, all of mid-cap IT is up. That's the point we've been making. Just Dial. So interesting. I mean, there's some life stirring in the mid-cap market beyond the Nifty 50 as well. Rajat Bose with us as well this morning. Good morning, Rajat. Your trades.
Good morning. My first trade is Biocon, which has already made the 2 targets, but then I would like to revise the targets to about 601 and 610 and put a stop loss instead of 582 as prescribed earlier. It should be placed below 589. and Hindalco is a sell. I would put a stop loss above 237, 232 to about 230.50 is the target range, and finally TCS February futures, put a stop loss below 3062, 3088 and 3097 are the two targets for TCS futures.
All right, gentlemen, thanks a lot for those trading strategies. For now, we have Vikram Limai, MD and CEO of NSE, now joining us to discuss a lot of issues. Mr. Limai, good morning. We'll discuss the SGX part as well, but I first want to discuss what happened last evening when a fake, SEBI circular was, doing the rounds in WhatsApp group that SEBI has asked NSE to give data on PSU banks. Are regulators looking at that issue right now? Because this could get interesting. I mean, if this circular was part of the market hours, it could have led to disturbing the market mechanism.
Yeah, and when I was asked the question when it came out the first time, I was quite clear that we haven't received any such letter, and that is the factual reality. So I'm sure the regulators would be looking into it in terms of how to prevent these things from happening going forward.
It looked very believable with the SEBI letterhead and stuff like that, except that there were some stocks there which were not even in F&O. Well, Mr. Limai, good morning. The more important point really is the second press release that we got from NSE, BSE and MSE yesterday, saying further to the February 9th press release there have been discussions with several exchanges, data vendors, index providers related to the announcement dated to February 9th. Can you elaborate a little on what were these? Will it mean that some kind of SGX Nifty or index will be allowed but not stock futures? Just some color of this discussions.
No. I just want to be clear. I mean, this press release was really to make all participants aware and all stakeholders aware that we're obviously focused on making sure that there is an orderly transition and that it is not disruptive for markets or investors. And in that regard, we're obviously in touch with all stakeholders, whether it's exchanges, index providers, investors, etc. And we're doing that soon after the announcement was made. We reached out to everyone. We continue to do that. And, we are here to be helpful to make sure that the investors who are trading Indian products are able to continue to trade going forward as well. And as we said before as well, there are alternatives for investors to trade either onshore in India or in Gift City.
Okay, but how do you react to that fairly angry note that came from the MSCI slamming the Indian exchanges action and calling it anti-competitive and protectionist?
See, I don't believe that it's anti-competitive in any way, because there are, these are, licensing arrangements and commercial contracts. And from that perspective, obviously, nobody's compelled to share their IP if they don't want to. So from that perspective, these are, commercial contracts, and they should be viewed as such. Second, it is in fact quite common to find other exchanges not sharing prices and data relating to their core contracts if liquidity is going to get fragmented and getting built offshore. So what we have done is not different from what actually exists even as policy with some exchanges, where data and licenses are not shared on core contracts because they don't want liquidity to move offshore. So I don't believe what we've done is anti-competitive in any way and different from what many other exchanges do.
Now, that point is taken, Mr. Limai, but the issue here is, and a lot of people believe that a lot of volumes were moving to Singapore because of taxation, being just too high from trading point of view in India. Now, the issue here is that, it's not just about data. For example, SGX generates huge volumes at say 8 a.m. or 7:30 a.m. when anyway NSE is closed and there's no data. So in that sense, the argument is that maybe not in the name of Nifty, but in some other name, the SGX can still have a product which sort of benchmarks Indian stocks. How can you prevent that?
No, I have no idea what that product would be if it is based on Indian prices.
But you're very clear that it can't be Nifty.
Prices and data from the Indian exchanges.
Yeah, but you're quite clear that it can't be Nifty.
No, obviously we have terminated our license on Nifty. We have terminated our license with SGX on Nifty. You're talking about alternate products. I'm just saying that any alternate product that's market linked will require prices from the Indian exchanges. So I'm not sure how that product can be created without getting prices from the Indian exchanges.
No, because
I think talking about
because
pre-market.
For example, pre-market, Mr. Limai, the SGX Nifty is still trading, right, and is generating volumes while it's not getting sort of.
No, right data. Now, obviously, there is a notice. There is a notice period. No. Please understand. There are. In order to terminate any license, there's a notice period.
No.
So we
Right
have
now,
a 6-month notice period with SGX.
Right now,
that expires in August.
No, I take that point, Mr. Limai. You know, that is of course during live market. I'm saying when the Indian market is not trading live, even then there is an equilibrium, say at around 7:30 a.m. and on SGX Nifty you are seeing volumes. That's the limited point I'm making.
Okay. Yeah, but all I'm saying is tomorrow if they want to create volumes in an alternate product that is benchmarked on an Indian security or an Indian index, they will have to try and get a price on that, right?
Yes.
Okay. Where will they get a price of an Indian security unless it is from the Indian exchanges?
Okay, so that's
my limited point. I don't know what product they're talking about. I'm just saying that whatever product you try and develop, if it is based on trying to get prices from the Indian exchange, then that will be difficult to do, is all I'm saying. If they have another creative way of doing it, we'll see what they come up with, but I have no idea what the details of that product are.
Mr. Limai, sir, morning. Could that creative way be routed through Gujarat, through GIFT? There's a lot of talk right now whether you could explore something with the SGX in GIFT City, whether there could be some kind of even an equity participation in that exchange from SGX, whether there could be some kind of a stock connect, what Hong Kong had with mainland Chinese shares. Is something like that being explored?
See, I've said this before. There have been discussions in the past with SGX to try and figure out how we move liquidity from offshore markets, including Singapore, to GIFT City, okay? Because that is the natural jurisdiction for if somebody wants to trade in a dollar contract with the tax advantages, etc. That is not available onshore. So those conversations have been had in the past, have been ongoing in the past before we did this. There is nothing wrong in trying to figure out mechanisms by which liquidity that is offshore can be moved to GIFT City, because GIFT City is an international jurisdiction. I cannot talk about details of what that arrangement might be or what form it might take. These are not easy things to do. They're quite complex in terms of operational, legal, structural, commercial considerations. So from that perspective, a lot has to fall in place for any of those arrangements to work out.
Okay. I have 3 quick questions if we can squeeze that in, Mr. Limai. One, therefore, to compensate for the absence of SGX Nifty, will Nifty and government and SEBI closely look at quickly launching a Nifty futures, say starting 6:30 a.m. or something, and going on after the cash markets close?
So we haven't had any discussion surrounding that in terms of extension of market hours for trading of Indian index products.
Okay. And the second question is, this sentence that came from MSCI, that this step of discontinuing provision of data, and I'm quoting them, could jeopardize the country's standing in indexes tracked by global funds. Now, what do you think that you can expect some kind of a backlash from MSCI? That can mean trillions of dollars of investments.
See, so I mean, obviously, I don't have any view on what MSCI can or cannot do. They've stated what they have to state. All I'm saying is that we have been in discussions with all stakeholders, including investors, etc. They obviously appreciate the position and why things have been done, etc. We are also trying to facilitate an orderly transition so that it is not disruptive for markets and investors. And investors have an alternative to trade India, whether it is India onshore or in GIFT City. And so by no means are investors going to be stranded without being able to hedge India risk.
That was the third question. Can GIFT City be anyway as competitive or as easy as SGX Nifty? Because there is a lot of products, and people normally like to trade in a place where they can move money from one to another. GIFT City is not quite an alternative.
No, as it relates to trading Indian markets in a dollar product with no STT and no taxes, that is an alternative that is available. Okay. Will it be as liquid, as competitive as Singapore or any other location right now? Obviously not, because it's a new exchange. But all I'm saying is that liquidity can get built in Gift City for those who want to trade a dollar product on India, with all the transaction cost advantages that they have in any other international jurisdiction. And liquidity is a function of people wanting to trade and people actually trading there. So those who are currently trading offshore, if they choose to trade in Gift City, obviously liquidity will build in Gift City. It will become a robust enough exchange.
Mr. Limai, finally, do you expect a tie-up with the SGX, whatever format that might be, for GIFT to work out by August, which is the deadline, which is when the current contract expires with the SGX?
I cannot comment on any kind of tie-ups or anything unless there is anything concrete that is visible and tangible that I can talk about.
Okay, Mr. Limai, thanks a lot for your time. Appreciate joining us and talking about a lot of issues. By the way, the market, we've been talking about IT stocks. Don't lose sight of what's happening in metals and steel in particular. Stocks like Tata Steel, SAIL, they have now started to make highs of the day. And obviously that's a bit global in nature as well. So that is the second sector which has started to participate. IT, of course, was the first one which participated. Now it's metals, and the market for now is holding the low of the day, though not been able to make much progress from that point as well. That point should not be forgotten. But it's expiry day as well.
Actually,
so
Ashwini was making that point, that it could well be that even the European markets will look at the bond yields and then move on. And, probably some such a hint is coming that commodities have taken a look at bond yields. And as Ed Moore's statement said, that bond yields won't scare the rally in commodities anytime soon. So perhaps people have just looked at the bond yields, reacted and moved on. So at the moment, Indian yields a little lower than where they began. They began at 7.79, if you remember. So they've moved off that level, and there is a little bit of bounce back coming definitely in the Nifty Bank and the mid caps, perhaps not so much in the Nifty just yet. We'll take a break on that note, and we will take stock of the latest in the PNB fraud case and the way forward with Ravi Krishnan Tucker, the